Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY held around 97.5 on Monday as traders look ahead to key inflation report later this week. After a weak jobs report on Friday, just 22,000 jobs added in August compared to the 75,000 that the market expected. Markets have nearly priced in a Fed rate cut this month, with growing speculation that it could be larger than a 25 basis point cut. From a technical perspective, the index remains under pressure, trading below both the psychological 98 level and the 100-day moving average at 98.68. With momentum tilted lower, focus now shifts to the July lows near 97.11 and the broader psychological level of 97. Next up, let's have a look at WTI crude oil, which steadied near 62.9 per barrel, snapping a 3-day decline after OPEC announced a smaller than expected production increase of 137,000 barrels per day starting in October. The move signals both a push for market share and caution about weaker demand ahead. Still, last week's soft US payrolls data added to concerns about slowing consumption. Technically, WTI is consolidating around the $62 level with support near 61.2 and resistance around the 20-day moving average at 63.25. In the near term, oil is likely to remain range bound between $60 and $66. Next up, let's have a look at gold. Gold extended its record-breaking rally, climbing to a new all-time high of 36.46 per ounce on Monday. The weaker U.S. jobs data, coupled with rising expectations of Fed easing, have pushed traders deeper into safe haven assets. The People's Bank of China also added to the reserves for a 10th straight month, reinforcing demand. Technically, momentum remains strong through the 14-day RSI above 70 suggest overbought conditions. Support is seen at $35.63 and $3,500, while the next upside levels to watch are $36.50 and $3,700. Lastly, let's have a look at the Australian dollar, which climbed towards 66 cents against the US dollar, lifted by Fed cut expectations and resilient local data. The pair is holding comfortably above the 14-day simple moving average at 65.10, reinforcing bullish momentum. Immediate resistance is at 66 cents, with July high of 66.25 in focus. On the downside, support remains at 65.10 and the psychological level of 65 cents. Well, that's it for today's morning market outlook. All eyes this week will be on US inflation data, which could set the tone for both the dollar and Fed policy expectations heading into September. As always, manage your risk and happy trading.